What's up, all my financial investors? It is your boy Shaddai, and I'm back again with another HINANCE video to break down the complex financial world for everyday people like me and you, so we can get to this money, this bread, this cheddar a little bit more smoothly. Today, we're talking about the storm brewing in the stock markets, some recommendations, how I feel. I did predict that the first few weeks was going to be nice and green. That wasn't the case. So I have to make adjustments on where I think the market's going. So you don't want to miss any details, recommendations, anything, right? So make sure you pay attention all the way throughout the video. Before I get there, I got to show my appreciation to you. Thank you for watching. Don't forget to hit thumbs up on this video. Comment down below how you feel about what I'm speaking on. And please don't forget to subscribe. We're trying to get the channel to 1K subs. Help me help you. The more subs, more information I can put together to help you find information for your portfolio. So, rub my back, I'll rub yours. You rub mine, I'll rub yours. It's a nice little massage party we're going to have. Before I continue any further, I do want to say that if you're interested in joining the Discord investor chat, shoot me a DM above on my Instagram and Twitter. It is free to join. We're just a group of investors looking to build generational wealth through sharing resources and having daily financial conversations. Y'all, I can't stress how important that is, especially when you're trying to work on your financial strategies. So let's get into it. Stocks storm brewing. That was a title that I seen on an article. And I was just like, wow, it do feel like something's brewing here. But, right, I said I predicted first 2 weeks of September to be kind of in the green. Hasn't been the case for the second week. We've lost a lot. We've lost a lot. I mean, some of my portfolios I've lost 2%. So it's definitely letting me know that what I had predicted was completely wrong, which is totally fine. It was just a prediction. I actually feel like we may get a bullish run. Depending on the CPI data that comes in on Tuesday, we could see a bullish run all the way up until the tapering happens. I expect some type of pullback to happen when the tapering happens because the stock market is being the economic, everything financial wise is being propped up right now by just how the government is moving. So I do believe the pullback to maybe start happening before tapering occurs, or if there's tapering news. I think that there's some good news coming out there's news coming out on the 21st, but this Tuesday there's also news coming out for CPI data, which could tilt the market one way or the other. I'm hoping that we have a small rally up until November-ish. That's my next prediction. Maybe small dip, then rally, just to get back all the gains that we lost within the last few months. I don't think it's going to be anything crazy, but I think it's definitely an opportunity for make monies. I think there's always opportunities to make money. There's going to be plenty of companies. There's going to be some companies that shoot out the roof, companies that don't. So I think that it's a good time to stay active, continue to do your due diligence. I'm not a financial advisor, so I'm not telling you what to do and what not to do, but I'm saying that it's a great time to just be knowledgeable on what's going on right now. So my recommendations would be to continue to diversify your portfolio, continue to stay active, continue to invest in stocks that make money, that have cash on hand, that can kind of take a little correction hit. I call it cash-like stocks. Stuff like Apple, stuff like, what else is like a cash-like stock to me? Some of the banks can be considered cash-like stocks because they're holding up very well, and they're being supported by the government. So there's many others out there. You got to do your due diligence on that, because some people may argue what I consider a cash-like stock is a stock that doesn't fluctuate too much, right? Like you feel comfortable that, all right, if I put 100,000 in this week, there's a good chance it's still going to be at 100,000 next week. Like it's not going to jump up. It's not going to jump down. It's probably going to remain. I may get a couple cents more, but it's not going to be nothing crazy. I just needed to sit there in case that, I don't find that now. I know I'm still invested in a good company, right? So adding more to the cash-like stocks is one of my recommendations. Also, adding more cash on hand is another recommendation. Adding to crypto is another recommendation. Adding more dividend stocks is another recommendation. Just kind of mitigating the risk, because what you don't really want to do is remove yourself entirely from the market and say, oh yeah, I'll get back when the correction happens. Well, what if the correction doesn't happen for another 3 months, and then you're not available to look at your phone that day, and then you miss the whole correction, and then your whole strategy just goes down the drain? Because I feel like there's a very strong, people are ready to buy whatever dip. Any dip that has happened has been getting bought up. I've been waiting to be like, all right, well, what's the dip that people are not going to buy? And I always get surprised. People are buying all the dips, whether it's crypto, whether it's stocks. It don't matter what it is. People are buying the dips. And you have to realize that there's a whole new generation of investors in the market. You know, the younger investors, we have the time to hold out another 5 to 10 years. So we're going to buy the dip right now. Someone that's older, they're probably not going to buy the dip because they maybe be unaware of where they'll be in the next 5 to 10 years. Excuse me. So you have to keep that in perspective. There's a whole new wave of people, and that's probably why the dip is getting bought so fast. So you want to be on alert. You want to stay active. You don't want to just kind of remove yourself, because like I said, there are opportunities all over the place. Like, look, a firm just jumped up 20% last week. I was thinking about buying into it. I never bought into it because I don't like chasing. I don't like chasing when stuff has taken off, but I mean, it just goes to show you, if you're doing your due diligence and you're doing, your research, which is due diligence, I'm sorry, you can find opportunities even while the market's trending down, right? So a lot of things to note. I think this is a time to remain calm, to remain confident, and to just tighten up your portfolio. If there's stocks in there that are just too risky, get out of them, man. Roll into fintech, roll into health, roll into, what else? Roll into banks, roll into something that you understand. Roll into a Chewy. Shout out to a Chewy stock. Roll into stuff that you know can make money, that is going to make money, that will benefit, and that will kind of not really be affected. Kind of recession proof is what you want to be at. But there's many debatable arguments on what is considered recession proof or not. But that's where the due diligence comes in. So I appreciate y'all for watching. Let me know how y'all feel about the market right now. You feel it's going to tumble? Do you feel like it's going to go on a bull rally? How do you feel? I'm interested to know, because I feel like when the people share how they feel, that's how the market's going to go. We already know how these platforms feel, the CNBCs. We know who their target audience is. It's the older crowd. So they're going to say, oh, well, the storm's coming. The market's going to crash. Market is, it's going to go down, 80% correction. Yeah, they're a different age level. And they have a different perspective. So those platforms are going to be promoting the crash, right? Because everybody wants a crash to happen. It's a buying opportunity. No matter what, no matter if you got $1 million in stocks, you kind of want a crash to happen so you can buy more. There can never be enough shares owned because the money is endless, right? So if the pullback comes, I'm happy. If it doesn't, I'm also happy because I'm invested either way. I'm going to invest on the dip, and I'm already invested now, and I have been buying stuff. Right? Don't tell nobody. Don't tell nobody. Either way, I appreciate y'all for watching. Let me know how you feel about, like I said, let me know how you feel about how the market's going. And, I'll respond. I'll respond to what you say. Y'all have a great rest of y'all day. I'll check y'all out tomorrow.